Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 10th, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. U.S. stock market is in correction. I'm currently in cash and mostly in cash. I traded a little bit on the short side through the reversed ETF and mostly TECS, which is 3 times inverse of the Nasdaq. SH is a 1 times inverse of SP 500. SPXS is 3 times SP 500 inverse. EV is a 2 times inverse of the emerging market. Those ETFs I got in and got out, just traded around it. I'm currently long the gold mining's ETF GDX, but it's a very small position. So most of my fund is in cash. About 90% in cash, 10% doing the trading and short-term trade. Let's take a look at the market indices and the charts. German DAX index downtrend. This one is below 50-day moving average. And Nasdaq monthly chart, and this is worth to pay close attention. Look at the previous major market downtrend. One is a year 2000, another is a 2008. In both before the market make the major drop, the market had so-called double top. It made a peak and came down, broke 12-month moving average and rebounded, but this second rebound did not reach previous high and came down again, break the 12-month moving average again, and then market went through many years, about 3 years of the downtrend until 2003 it found its bottom. Same with year 2008. Market dropped below 12-month moving average and rebounded. This time rebound hit the 12-month moving average and came down again. Then market went through a major downtrend for a year. This is a characteristic when the bull market gets turned into bear market and market first break down major moving average and rebounded, but the rebound never reached the previous high and market came down again because the sellers overwhelmed the buyers. And now look at the current market. In the past many years, the index, Nasdaq index had dropped below 12 months moving average many times, but every time it rebounded and every rebound surpassed the previous high. So it came down and go back up and exceeded previous high and keep going up. And even last 2 years, it came down moving average again and went back up. But pay close attention at the most recent drop, which is the last year. The mid of last year, the market came down 12 months moving average and it finally rebounded above 12 months moving average, but it did not reach previous high and came down again, break 12 months moving average again. So this drop, look at this chart, those two peaks has the characteristics of year 2008 and year 2000. It did not have the same characteristics with the previous correction. Those bull market correction always go back up and went higher than previous high, but this one did not. This most recent drop, this high was not higher than previous high. Therefore, we have to be very cautious. This is a long-term chart, monthly Nasdaq. Therefore, from these charts and probability favor on the side, Nasdaq may enter a long-term correction or long-term downtrend. So we have to be very careful and we have to operate assuming that market can continue go down for a prolonged period of time. So that's all. Nasdaq weekly chart, and here weekly chart you see clearly most recent peak is lower than previous peak and came down again. The blue line is 40 weeks moving average, basically 200-day moving average. Yellow line is a 50-day moving average. So right now market is below both major moving averages. And also you can see when the market goes down and the volume is really high, so that's a bad sign. That means there are a lot of mutual funds, the big money is selling into this market. And Nasdaq daily chart and broke major support and below 50-day moving average. And Friday looks like the selling is not over yet. Friday the market just well, actually, basically, let's go back to the first day of trading, Monday. After the new year, the market opened with a gap because of the overseas market in China was selling off. So U.S. market get dragged down. And Tuesday, it never rebound. You never seen the buyer came in, just always selling. And then Wednesday also came down, and Thursday came down, Friday even broke Thursday's low. So all the volumes are very high. So the big money is selling into this market, even though as the market is dropping, they're more and more selling. So it's not a good thing. I mean, basically the market is falling apart. So we have to be very careful. And the Monday, we may have a panic selling. If we have a panic sell, we may reach the short-term bottom, and then market may rebound from there. But even though, because of the long-term chart is not good, so it's just not a market to buy stocks. So we have to be careful with this market. Mid cap, same ugly chart, broke down. Small cap came down. SP 500 monthly chart, this is large cap index. It's the same thing. SP 500 broke below 12 months moving average, which is a great line here. And the most recent peak never reached previous peak last year. So not a good sign. Weekly chart, SP 500, you can see broke below both 10-week and 40-week moving average, came down. And when market drop, the volume is high. There are lots of sellers. Daily chart, you can see this is just coming down. The market is melting down. However, this is not a time to enter the short position. It's too late. You should have entered the short position on Monday or at most Tuesday, but the coming Monday, tomorrow, it will be too late to enter short position. If you have shorted, you should take profit on Monday. So we may have a panic sell on Monday, and after panic sell, usually market will rebound a little bit. But look at this rebound and just came down again. So make the double bottom and then go up. But still, it never reached the previous high. So that's how the market works. It came down. When the market came down, it will invite more sellers. And gold, this is interesting. Gold may have made a bottom here. Gold rebound above 50-day moving average and broke this trading range, so going up. So gold is moving opposite with the general stock market. Silver is still not very good yet. Silver is still at the base. It's still making that base. Gold mining stock above 50-day moving average. This is good. GDX, gold mining stock ETF. US dollar uptrend, but it didn't reach the previous high, so we have to guard, see where it goes next. If it go above, it's fine. If it break down, then that would be very bad for US dollar. But for now, looks like the trend is up for the US dollar. Crude oil continue go down. This is a very prolonged and a very deep downtrend. Energy ETF go down. Shanghai Stock Exchange Index monthly chart. We like to take a look at the long-term chart of China stock. China stock had a history of going through this erratic move. When it goes up a lot. And when it came down a lot too. So right now it's coming down. So basically, it reached the high last year and the 5,100 point, and then came down and rebound. Rebound just hit the 12 months moving average and came down again. So next leg, we don't know. I mean, China market is just like when it drop, you don't know where the bottom is. So it's the chart is ugly and it's really bad. China market weekly chart, and you can see it hits near the 40 weeks moving average and just came down. This is the China market daily chart, and first day of the trading on New Year, and it just hit the circle breaker. Basically, it hits 5% job, index hits 5% job, and then hit a 7% job. It stopped trading for the day. And because of circuit breaker, a lot of people want to sell, could not sell. So when the market restore trading, and there'll be more people try to sell. So market just keep coming down. And China Asia ETF, same thing, come down. Very ugly chart, just gap down. Another Asia ETF, gap down. So those are the things to be avoided. Just avoid them. FXI, China correlated with the China stock as well. Downtrend. This FXI actually entered the downtrend a lot earlier than the China index. So looks like someone in US knows more information perhaps. So the ETF correlated with the China and trading in US, they actually came down a lot earlier than the China's market. IBB, this is a US biotech ETF downtrend, and IYR real estate, and this is still consolidating. This is not too bad. Real estate ETF is not officially in the downtrend yet. It's just in the trading range of $71 to $76. Airline stock. This trend is not good. It used to be in the uptrend, but now it broke $24, which is a trading range here. Now it's coming down. JJC is a copper ETF, copper price ETF, ETN. It came down, downtrend. Mortgage bond price spike up. So mortgage interest rate, and looks like it came down last week. This is a semiconductor ETF. Broke this $52 support and came down. This is in a downtrend. Social media ETF, same story, downtrend. And this TAN is a solar ETF, consolidating. This one did not break down. Well, it broke down on Wednesday, but it's still in the trading range. XLF financial ETF. This is really, really bad. We have to pay close attention to financial sector, because financial sector tend to lead the market. Also, the Nasdaq also lead the market as well. The high-tech stock also lead the market. Both are doing poorly right now. Financial sector ETF, and look at this, broke support, came down, and bad thing. So basically, we're in a I would say the bearish phase of the stock market. So we're just coming down. I'd like to talk about inverse ETF. When the market going through the downtrend, if you can catch the wave, trading inverse ETF is very rewarding. However, there's something to pay attention. Do not enter the short position after market has declined for a while. We have to protect ourselves against the market rebound. And when we do short inverse ETF, when you buy inverse ETF, you're essentially you're shorting the market. So when you do short, and take the profit quickly, because the market drop much quicker than when they climb up. And if you time it wrong, the market rebound, you have to take loss quickly, because in bear market also rebound very sharply as well. So the first day when you had the loss, you have to take the loss. You don't wait for second day. And never hold the leverage ETF for a very long period of time because of the tracking risk. Something like a 2 times, 3 times leverage ETF, just trade them in short term, like a few days of trading, but don't hold it for like a week or month. That's not a good idea. And I'd like to show you the charts of the inverse ETF. DTO, this is a 2 times inverse of the crude oil. So crude oil is in a downtrend, DTO is in the uptrend. So the time to enter this is when they break above the previous range. That day you can enter, or when they pull back. When they pull back to major moving average, such as the green line, which is 10 days moving average, or the purple line, 20-day moving average, that's a day you can enter. But when you enter, also use previous low as the stop order. And that's DTO. EV is a 2 times inverse of emerging market. All the emerging market are doing very poorly right now. So this EV is going up. So right now it's a little bit too extended. I don't recommend to buy it on Monday. If it can come back down, then you may buy it, assuming the market is still in a downtrend overall. So when the inverse ETF came down to moving average, that means the market rebound into the resistance. That's the time to enter the short position. FXP is a 2 times short of the China. This is the inverse of the FXI, basically. This is also in a very sharp uptrend. But notice that all the leverage inverse ETF, it will hit the absolute peak when the market panic. That's a day when you take profit. If you don't, then the second day, this inverse ETF came down a lot because market had rebounded. So when you trade inverse ETF, especially leverage inverse ETF, you gotta be quick. Take profit quickly, take loss quickly. You cannot hold on to it. SH is 1 times short of the SP 500. This is a little bit better than the SPXS, which is a 3 times inverse ETF. This, if you are timing wrong, you can lose a lot of money. But if you time it correctly, you can make a lot of money in a few days. Basically, when the market hit the panic button in 2-3 days, it will sell off a lot. Then your inverse ETF, you can make a lot of money and take the profit quickly. That's the idea. TECS, 3 times inverse of the SP 500, also has a sharp going up. So I anticipate this thing will hit another high on Monday, and then that's the time you cannot enter. Well, that's the time you should take profit, exit inverse ETF. So anyhow, let's take a look at the leaderboard card list. IBD basically is an investor business daily. It's a newsletter, stock recommendation newsletter. Leaderboard is one of the IBD's service. They provide stock which is leading the market on the upside when the market is in a up phase. And they also give you a cut list. Those are previous leaders. Now it's turning down. So once the stock go into the cut list, you cannot hold on to them. You have to sell them. If you know how to short, you may short them. So I'm going to show you those charts of those stocks. Let's take a look. Those stocks are on the IBD cut list. First of all, is Amazon. Amazon broke 50-day moving average with a huge volume. Why? Because institutions are selling their stock. And then it continue to go down with a high volume. There are more and more sellers. Once the stock break 50-day moving average, no buyer came in to push it back up to 50-day moving average. You actually have more sellers coming. That's why 50-day moving average is a last defense line for us, for individual investors. If your stock break 50-day moving average, you got to get out until it go back above 50-day moving average. Then you can always buy back. Same thing here. It came down below 50-day moving average, you get out. And if we go back up again, you buy again. So this is no big deal. You can just buy back. See, but here doesn't look like any buyer is pushing it back up. So now it's more and more sellers. So Amazon actually become a short candidate from here. But to short a stock, you gotta also time it correctly. You need to wait until it rebound a little bit to that resistance and you short, or it break the previous low, then you can short. DHI is another previous leader, home building stock, DR Horton, and broke 50-day moving average with a high volume and broke 200-day moving average with a huge volume. So bad stock. Facebook also became bad. It used to be in the uptrend for a year or so. Now it gap down 50-day moving average with a high volume and continue come down. There's no rebound. So more and more sellers step in. Google is another tech leader. It had been in a very nice uptrend, but now it broke 50-day moving average with a high volume, came down again. So this is also became a short cut list on the IBD leaderboard. IMAX is really bad. IMAX had a good news. They had this Star Wars movie come out. However, stock didn't go up, and stock gets sold off. So a more seller coming. So all these are bad stocks. Monster Beverage came down as well. Palo Alto Network came down as well. All these are previous leaders. Now they're turning bad. So that means if you used to long those stocks, right now you should not be long them. You should just get out. If you know how to short, you may consider short them. Papa John's, PZZA, this is a look at how it's doing. This stock broke 50-day moving average, linger around, rebound a little bit into 50-day moving average, came down, hit 200-day moving average, and just rebounded and bouncing back and forth in this range and suddenly dropped down and just came down. So it's a staircase, came down. A lot of stock acting like that. The first break of 50-day moving average, and that's a telltale sign that something's wrong is with the stock, and then it may take several months for the stock finally crash to the bottom, but eventually it looks like it will. So the rule of thumb is do not hold any stock that's below 50-day moving average. Signature Bank, SBNY, this is also used to be a leaderboard stock in very bad right now. You see this huge volume when the stock on a down day. Those are the shares being sold. Who is selling stocks? Who is selling this much? It's not you and I. It is institution investors are selling this stock. So when they sell the stock, that means something's really wrong with the stock or with the company, who knows what. So the stock lose the institution support. It cannot go up. So there's no reason for you and I stay in this stock. So basically, those are the list of stock you cannot hold. Anyhow, what to do now? If you're in cash, stay in cash. Continue to stay in cash. And there's no rush to buy stock. However, if you're unfortunately still long the stock, you can wait for any of the two things happen to get out. Number one is when your stock rebound to a resistance, such as a moving average, previous support, or resistance. If your stock rebound to that line, you can sell. Second is if your stock break down most recent low, you should sell. If you just look at the previous few days and look at what is the low point. If on Monday it break down that low, or Tuesday it break down that low, you have to get out. And if you're shorting this market, take profit quickly because the short-term rebound is possible, especially after the recent sharp decline, and the market may rebound sharply. Right now it's too late to enter new short position, so do not short the stock or buy the inverse ETF on Monday. It is too late. You should have done that last week. But be very careful with the idea of buying stocks. And because of the long-term trend does not look good now, the monthly chart I showed you on the NASDAQ and the weekly chart does not look very good. So I would not buy stock in this market. And basic idea is as the market enter the downtrend, it's going in the process of going down. It is like a knife is falling. Do not try to catch it because it's very risky. That's all for this week. See you next week.